I'm always trying to push the boundaries of RENKO chart trading. I really wanted a day trading strategy. Now I played around with a few indicators tools, and I think I've come up with a really good one here for you in this video. Now it focuses in on VWAP, a popular indicator tool in the world of stocks. So I focused in on US stocks in particular. Works across any type of stock where you can get that volume data. Also works on commodities as well, so a broad range of markets for you to try it on. Now in this video I'm going to pull it to pieces, explain why it should work, how you can build it in your own charts, and I'm going to put on a few examples to show you how I actually trade it. So this is what the end product looks like. It looks a bit more complicated than what it actually is. It's quite straightforward, easy to set up. Like I say, we're going to go through the detail anyway, you know, step by step, so you've got that on your chart. So with that, let's get into it. Now if I was to describe this strategy, I'll probably call it a trend filtered day trading breakout strategy. And like we've mentioned, it utilizes RENKO charts to smooth out the noise, and most importantly VWAP, that's volume weighted average price. What does that mean? Well, it's simply just a trading tool that represents the average price a security has traded at, you know, throughout the day, or different periods of the day, based on both volume and price. So it gives us a good idea of, you know, where the key price levels, interest levels are. And you can use VWAP for many reasons. Here we're going to use it more as a breakout tool. Let's quickly navigate the strategy. I'm going to start in the bottom of the chart window. Now on the left and right you can see an awesome oscillator. Now that is set on the market above. It is slightly longer term, and this is our trend filter. So here is the short term one. This is a 1 hour and this is a 3 hour, and you can see when it's gone green it's bullish. So we are only going to take bullish signals, and we have to have both the 1 hour and 3 hour set to the same period, you know, the same color. So it actually went green, double green, at 7:30 in this example, Wednesday 15th March, and on the RENKO chart you can see that was somewhere back there. So now we are only looking for bullish signals. Now jumping on to the top chart, this strategy gives you many options. Remember I said it's about breakouts, and we've got our, you know, VWAP, and we've got these VWAP bands as well. Now the white line is the VWAP, the red lines are VWAP bands around it, and we're looking for the price to move outside of those bands. We've got the general, you know, VWAP fixed to the start of the open. Now in this example I'm using SPY, that's the very popular day trading ticker for the S&P 500. Like I said, you can use it in stocks, commodities. It's important to get this defined start to the day. So things like Forex, where there's no volume, is, you know, almost impossible to use this on. You could probably even try it in cryptos, but again, it's the problem is picking the start of the day. It's 24/7 crypto, whereas a stock market or commodity market is more defined in its open and close times. But in this example, like I said, it's the S&P 500, and we are, well, it's going to give you quite a few options on how to play this strategy. You can be more aggressive, which is this buy one here, and we're looking for the RENKO blocks to break out of the two pink bands. And remember, we're only looking for long trades because of the two awesome oscillator signals below. And as you can see, it did break on up there. We put our stop loss below the lows of the day. You can use that volume weighted average price as your guide to put the low on, or the low block. And as you can see, that one actually retraced back and then bounced on up. So that's a more aggressive approach. And the second one I use here is I actually wait for the first half hour of the day to finish. and there's a lot of mess that normally goes along that first half hour, and I'll wait for the market to tidy itself up, and then I'll wait for that next breakout to happen. And this is why I've signaled it as buy too. Same stop loss methodology below that low of the day there, and then we are off and running. Now there are multiple ways you can get out of this trade. You could set a risk return of maybe 1.5 to 1. That seems to be a nice number, 1.25, 1.5 to 1. But I like to use it on a rule-based approach, and as you can see here, we've got two exit options. We've got this moving average here, this yellow line, and as it broke down, you could close out there, or you could use alternatively what we've got up here, this sell to signal, which is when the price actually closed back within the top of the VWAP band there. So a lot of options to play. Really like this strategy, good day trading strategy. And you can see I know RENKO charts aren't supposed to have time, and we've introduced time in here, but it does help this type of strategy. You can actually see that the actual time scales, it's a few hours and you've made a very nice generous return on this strategy. So we're going to have a look at next how I actually set this up. We're going to go step by step through all the variables that I've used on this chart. It looks a lot, but I can tell you it's actually not too much, and once it's set up it's pretty easy to run. So with that, let's get into that detail. So let's go through setting up the charts, and we're going to start with the window itself. Now if you notice up in the top you've got a choice of windows to pick. I've used a 3-1, the trading area on the top, and then those two sub ones at the bottom for the awesome oscillator. So that's the first point. You want to get that window set up like that. Then over on the top left we're using RENKO charts. Now let's just focus in on those blocks first, because I've done a few things to those. Now we right click on them, change the settings. Now I've used a traditional method of setting the size, so using the correct block size, critical for getting this right. You want enough movement to give you the signals, but you don't want too much so it like whipsaws you out. So it's a crucial process getting the block size right. In this one I've used a 0.25 on the SPY. I've got loads of videos in the RENKO playlist for you, and one specifically on how you concentrate on block size. I'll put a link to that at the end of this video. Another important factor is I've used the open, high, low, close. Now in TradingView it gives you two: the close, which is a lot smoother than the OHLC, but I wanted that to incorporate the detail. When I find that you're in the lower day trading type world, you need more detail. You don't want to be taken out unknowingly by having a too smooth RENKO chart. So OHLC important, traditional fixed block size, and getting that block size also very important. Now you also notice something funny about the colors of the RENKO blocks. They're not the usual traditional green red turning points, and that's because I've added on another indicator to actually smooth out the color of the trend, to make it more obvious when we are trying to get into the trade. And when I go through the defined rule set after this part of the video, you'll understand why that I'm doing that, making it obvious, greens, reds, or whatever color you may want to set up. But you can do that. We need an indicator, and it's called CM_EMA trend bars. There you go, CM_EMA trend bars. You can find that by hitting the indicators tab. If you type CM underscore, go through that EMA, and you'll find it in the list. Add that, and if you see the variables behind that, you can see that it smooths out the trend. So it's now highlighting the strength of that trend over the blocks, and just set the EMA uptrend to 200. So it's going to look at the last 200 blocks and then work out the colour of the trend on that, and then that will be our blocks set up. So that's the RENKO chart set up. So let's just go to the bottom here. Now, how have I got the awesome oscillator on its own? Well, if I just pull down that panel there, I've actually got hidden behind here the actual I suppose candlestick chart for the awesome oscillator. I'm not using the RENKOs down here. It's just a standard chart, and I've just hidden it away. We can get it back just to show you, I hope. Well, we get the title there, yep, and we can do that. There you go, you can see that in there. We don't really need that information, but it allows us to create this awesome oscillator off the bat. And why have I used a non-RENKO? Well, I wanted a slightly different slant on that trend, slightly more independent sort of viewpoint that would create. So let's hide that again, because we don't need it. And it's the same with the awesome oscillator on the right, exactly the same. So we've hidden that. Let's get rid of that, drag that up, and the awesome oscillator is added on there. There's nothing to set differently. It's, you know, the standard awesome oscillator, other than the fact that I've changed it to this line approach because it shows the greens and reds, the bulls and bears more clearly, and you just do that by clicking on the line there. Now, time wise, as you can see in the top there, 3 hours for the one on the left and 1 hour for the one on the right. Now, I did mention also that I introduced time to the RENKO chart, and if we click on the RENKO chart, you see it's set to 1 minute there in trading view. That's because it allows those blocks when they newly create to be closed off every minute. So when we're in this day trading strategy, we need quickly defined blocks, and that allows me to do that. So what other indicators do we have on the chart? So let's start here on the top left. We got a moving average, and that was our filter to get us out the trade. Just simply set to 20. I like to use standard popular moving average numbers. I don't try and backfit them. And then we've got something called AAVP. Again, type that into the indicators bar and you'll get that up. Just quickly run through the settings: 14, 50, 70 there. In terms of style, we got volume profile on, and we got this red one here highlighted, point of control, and that will be important for the strategy, and we'll talk about that in the defined rules in a minute. But that is the bit that we really want from this strategy, and this one allows us, like we mentioned previously, to help set our stop loss low of the day, and we can actually visualize where all the interest is in the day's trading. Then under that we got the VWAP, and this gives us those bands. Again, type that into the top. You should be able to pull that off. And what have we got set up inside it? I've taken off the lower, so the number 2 and number 3 bands. They give even wider bands. Maybe another strategy there for you. Bands fills ticks on, that just shades out the background area, but we want the upper and lower of number 1, and the VWAP, which is the white line, that's the important one. But the breakouts come around those upper and lower bands there. In terms of inputs, just set to the chart, anchor period session, high, low, close to read the source, and they're the inputs. So not much to it there. And that's basically, I believe, the full setup for what we need. Now, the only other thing is this manually drawn on box. If you're doing like version 2, which is the more conservative version, then that was there just for visual interpretation. But as you can see, by the time that last block, because it's minutes, it's going to give us that defined period a lot easier. I just closed that block off there, and just so I could visualize it a lot simpler when it came to that next signal that broke out over there. So it might take you 5-10 minutes to set this chart up, but once you've done it, you're off and ready to go. So now let's go through the defined rule set in order of how to actually do this strategy. So rule 1 is the trend filter. We don't do anything until we know what the trend is, and we're going to use our 2 awesome oscillators at the bottom for that. Remember, they both have to be green for the bullish up trades and both have to be red for the down trades. Beauty of this strategy, again, you can do it both long and short. So once we've determined the trend, we then move into the VWAP phase. Now, I mentioned previously the point of control, this red line up the top here. Now, this is going to be very important. We want that within the bands between the two light red pink lines there, the VWAP bands. And that's important because we want the momentum, the ping from, the VWAP, white line there. So rule 2, get the point of control line in between the two VWAP bands. Third rule, when we see this breakout, we want the blocks inside there to be trending up green through that actual breakout. We don't take the trade if the blocks are outside there and red. They've got to be green on the breakout, and that full block there, as we can see, has to be green. And it was the same with that second example when it does there. That was the purpose of that trend color filter on top of the RENKO blocks. Now the next rule is we need the stop loss. So when we've broken out, we put that below the low of that day so far, and we can judge that by using the VWAP down there. You can see clearly the bottom line marries in with the bottom block, so we put it just below in that space there, and it'll be the same for that second trade that broke out there. So the risk return is a bit maybe poorer than the first one because of the further move away, but it's not, and in this example it's not too different, but you might see that over different stocks and instruments. So then we've got into the trade, right? So we've got the breakout. The next rule is about managing the trade to the finish line. So we've got different options, and to be consistent and to be able to measure the success of this strategy, you've got to stick to what you decide. Don't keep changing between. Define your approach and stick with it. Give it a chance, measure those results, see if that works. If it doesn't, then you can maybe adopt some of the other ideas, but please be consistent. So we got the moving average, so we're in the trade, and the rule to get out is when it breaks on back through the moving average. Secondly, we had the other exit when it broke back in to the top of that VWAP band. And thirdly, you could have a defined risk return to start with. I would suggest somewhere around 1.5 to 1. How can we gauge that? Well, if we drew that on using the drawing tool on the side, we had a long position. Let's start from that second trade. We draw that on. The stop loss is about there, and we draw that on up. As you can see, 1.5 to 1 is about here. Our ultimate trade there was, if we took it to the very top, 3.63 to 1, so a good risk return there. Now you can also manage this slightly differently depending on how active you want to be in the trade. So we could say we're starting with a 1.5 to 1 ratio, and then when it got to say like 1.25, you trail up the stop maybe behind the moving average. So instead of getting out around here, it gives you a sort of second chance to continue with any further upside momentum, or it could be the pink red line break back in again. Define what you're going to do before you start and stick to it. Very important. Don't keep changing, tinkering as the trade goes on. You're not going to get good results if you do. You've got to be consistent with this. And I suppose the ultimate exit is if these guys at the bottom, the awesome oscillators, then change. You don't really want to be in the trade because they're saying you're in the wrong direction of the trend. So that really is the basic rule set. Not much to it. Like I said, once you get familiar with the strategy, it's all very straightforward. Now don't forget, the rules simply just flip on their head for the short trade. Green blocks become red blocks, vice versa. It's all common sense and quite straightforward to apply. Now how could you trade these? What instruments could you use? Well, if you can go short the underlying, then that's brilliant as well. But maybe options, buying calls and puts, short-term calls and put options, fabulous to give you the leverage into that trade. Or if you're not able to access those, CFD spread bets give you the long and short entry point as well, and leverage on top of that. So many options for this strategy. Now, I mentioned right at the start that the importance of getting the block size right. Now, that video link is coming up shortly. Now, also, if you want to learn more about the RENKO way of trading and how you build and the whole sphere of RENKO trading and chart building in one area, I've got a great playlist on the YouTube channel as well. There's about 10-12 videos in there, pretty comprehensive stuff if you want to get more into the RENKO world, and those videos are coming up now.